My name is Assalamu alaikum, everybody. My name is Safir. I'm one of the co-founders of Nia. Thank you so much for joining today, or if you're going to watch the recording after. This is our halal finance series that we're doing as part of Nia. The first one that we had was with Sheikh Umar talking about the concept of wealth in Islam. And the second one that we're doing today is about the practical guide to essentials of money management. So I'll tell you a little bit about my background and then we'll go ahead and get started. But really, what we're trying to accomplish in this session today is help to create a values-driven framework for financial peace. And I use that word very explicitly, financial peace, and that's what we're really going to be driving home today, inshallah. So I spent almost 15 years trying to help teach people about personal finance and taking a ethical values-driven approach. I'm the author of a website called Muslim.finance along with Sheikh Umar, where we share practical systems for kind of how to manage money responsibly and done a number of investments across both public markets and private investments in real estate, startups, and a whole bunch of things. And so have a lot of experience across investing in various things, and definitely can provide some guidance here of how I've created my system for at least how to approach personal finance. So again, I want to bring up this concept of financial peace and security. Whenever people talk about personal finance, they often think about the outcome and they often think about budgeting and expenses and tracking every single dollar. They want to use systems like mint.com to kind of see exactly what's happening. But really, what I like to do and what I encourage people that I talk to do is to create a system. Instead of tracking every dollar, you want to be able to create a system so really that your money works for you instead of you having to work for your money, right? And the only way that you can do that is by creating a system that's designed to help you get financial peace. It might not necessarily be a system that's designed to get you the raw most dollars out of your investments and savings. It's going to be designed for you to achieve financial peace. And those sometimes are two different things. And we'll talk about kind of some of that in detail. So I think the first aspect I want to talk about for defining financial peace is peace is what does financial peace look like for you? It depends on each person. You know, everybody has different circumstances. Some people have kids, some people are taking care of their parents and they have different obligations. Some people have different needs from other people. And so it's very important to assess what does financial peace look like for you. For some people, it might be being able to save up enough money and have enough investments to do their passion projects or work in the nonprofit space. Whatever it is, it's very important to kind of define, in 10, 15 years, what what does that look like for you? And oftentimes, sometimes people think that that's a large sum of money, but I would actually argue that that's typically not the case. That's almost a fallacy a lot of the times, that making a lot of money, having a lot of money in cash and savings is going to give you some type of financial peace. I think what people more are looking for is some reliability, consistency in what they have or what they can achieve in terms of income to be able to focus on things around family or nonprofit work or so on. So that's one piece of the equation is what does financial peace look like for you? And it's different again for every single person. The second part is mastering the psychology of money. And honestly, I would tell you that mastering the psychology of money is more important than figuring out how to underwrite investments, understanding like a P&L of a business. Mastering the psychology of money is arguably the most important thing that you can do because we are humans and we are driven by behaviors. And 99% of the time, that's what ends up how people making decisions rather than math and spreadsheets. So it's really important to understand our psychology when it comes to money and reorient that whenever possible. So there's kind of like four sections that I like to divide financial peace to: budget, savings, giving, and investing. And we'll walk through a little bit about what each of these mean. And we're going to have a whole another series with Nia on investing, for example. We are going to walk into very much details about investing in different asset classes and stuff like that. But we'll kind of give a brief overview today. But before I get into that, I want to emphasize 2 points. One is from the Quran, and Allah Subhanahu wa Taala says that don't spend excessively or don't be stingy. Right? It's this principle of the golden mean, and that's what we should really practice in our finances. We're not trying to save and nickel every penny. We're also not trying to spend lavishly. There's a balance between the two, and whenever that there's an extreme between the two, even saving till the last penny, you're often not achieving financial peace. You're achieving probably optimizing for the last dollar. And that's not going to help you achieve financial peace. So one of the other quotes that I like to bring up is by Ramit Sethi. It's a horrible book name, but it's called I Will Teach You to Be Rich. And it's probably one of the two most books that I recommend to people. And it also has a Netflix series if you don't like reading books, but I would highly recommend it. And he says that in the end, managing your finances well is a lot like developing a strong personal productivity system. A strong personal productivity system. You keep track of everything without making it your full time job. You set goals, you break them down into small bite sized tasks. You save yourself time by automating manual work, and you spend your time and brain power focusing on the bigger picture. That's what I try to do with my time and money. At the end of the day, it goes back to the concept that I talk about. How can you make your money work for you rather than you working for your money? And if you're going to optimize for every dollar, you're going to be doing more of the latter than the former. And so that's really the system that I've created for myself, and that's kind of what I'm going to share with you today. So let's talk about the budget. What I typically do is that I allocate about 2/3 of my income into living expenses. Now, if you have a very high income or if you have a lower income, then you might need to adjust this a little bit. But I'm just sharing kind of what my pie chart looks like. And then I divide the rest of the 1/3 into different categories. Now, again, these percentages might vary for you, but for me, it's about 11% on giving, 11% on investing, and 11% on savings. I try to equate them almost equally. And now the pie chart that we're talking about here, the bucket that we're talking about here is post-tax dollars. So let's say you make $6,000 a month post-tax. 2/3 of that would go to living expenses. 1/3 of that would go to the rest of these categories. One of the important things to talk about in kind of the system and the earlier aspects is that there's always a limit for how much that you can cut costs, but there's no limit for how much you can grow income. And we'll talk about this a little bit further down the line. So how do we actually create an automatic system that kind of ties back to this pie chart, if you will? So what I do is I automate the process like we kind of talked about. I create two checking accounts for myself. One is my expenses account. So 2/3 of my paycheck is coming to that expenses account. And all of my bills, my credit card, my rent, my mortgage, whatever, is all being sent out of that account. So roughly speaking, most of that money will be spent from that expenses account. I might have a little bit of a buffer sometimes. Then I create a second checking account, and I automatically from my paychecks and 1/3 of my income into the future slash purpose account. Now I have 1/3 coming in, and whatever my giving and investing amounts is, I do all of my giving automatically, like 99%. Sometimes occasionally I do it, sporadically or one time. All of that is leaving that account. So I have automatic giving set to Charity Vest, which we'll talk about a little bit later. And then I have automatic investing through M1 Finance, or various banks allow you to invest in ETFs and mutual funds automatically. Whatever remains in that bank account is for savings, right? And mostly for short-term savings that we'll talk about. Now, before we get into the savings, let's talk about a little bit about like my principles of spending. So again, these are my principles of spending. So everybody might have a different strategy, but before spending, some of the things that I ask myself are, I'm adjusting the volume because someone made a couple comments on that. Um, Before going out and spending anything, I ask myself, would this be something I buy if no one else knew? Now, everybody knows we live in a hyper consumer Instagram like society, right? Sometimes we have to ask ourselves, really dive deep into our core of like, am I actually doing this for myself or just doing it because, I want someone else to kind of know that, I have a BMW or I have a Mercedes or whatever, right? Ask yourself, would I buy this if no one else knew? The second thing is that what is the trade-off between time and money? If you're driving 5 miles to go save 10 cents on gas, probably not a winning strategy, right? And I give you an example of, if you spent 30 minutes every day saving $10 for like one purchasing decision that you made, like you're buying, I don't know, three things a day, and then you spent 30 minutes trying to get the best deal and look up coupon codes, and it ends up taking you 30 minutes of time. If you look at it on a yearly basis, you would have traded about 182 hours for trying to save $10 every day, right? So the point is that uh focus on the forest, don't focus on the trees. It might feel good to save $10. I'm not saying to don't be conscious and don't look for opportunities where you can save money and don't spend sporadically, but there is a hard balance between time and money. Money you can always get back, time you can never get back. You can never get back time. And so, sometimes people say time is money. And in my perspective, time is more than money, always, any day of the week. So let's talk about savings. We were talking about kind of the account, which has the 1/3 of income coming in. What's leaving from that account is both automatic investing and donating. And so what's remaining is our savings. So I treat the remaining balance of that bank account as short-term goals. I need to buy a car. I need to have an emergency fund of, people should generally have about 3 months of emergency fund, or I need to go to Hajj, or any short-term goals, things that I need kind of in the next 12 months or so. I don't want to be investing in that money in the market or in other investments just because it might be too volatile. And then my investments, those are more for longer term goals. I need a house down payment, I need retirement, or I need some big purchase that I need to do. That's when it's good for investing in longer term things. So that's how I kind of approach both short term goals and long term goals. So let's talk a little bit about. Sorry, guys. One technical issue with my daughter. Okay. So let's talk a little bit about investing. So the best investing strategy is one that you can stick with. It's simple, it's automatic, and long term. The most two important points actually are the first two, simple and automatic. Everybody thinks about long term, but the key is that it's simple and automatic, something that you understand and you're automating it as much as possible so that you don't have to think about it. Now, this is one of the charts that we like to talk about in terms of investment horizons. And so you can see here that, for anyone that has a time horizon of 20 plus years, you want to invest majority of that money in stocks. You want to have a little bit of, 5 to 10% in terms of real estate. And then you might have a couple of alternatives. If your time horizon is shorter, the stock market is very volatile, and you don't want to put as much money in the stock market. And especially if you have an even shorter time horizon of under 10 years, then you want to reduce that as much as possible and move towards something that has lower stable returns. So, as Muslims, we don't have an option of bonds or fixed income. And so the best options that we have often are real estate. And so that's why I put, in a larger percentage of allocation in real estate, if you will, here. All right, let's go to the next one. So in terms of strategic investing, so we talked about this like allocation about like stocks versus real estate and alternatives. The best way to do this is just make a spreadsheet of all of your assets. List all of them down. Stocks, the one in your regular account, the one in your 401k, any real estate that you might have, cash, and Bitcoin. And you add up all the amounts, and then you figure out what your allocation should be based off of this guide. And you adjust based off of that. What it forces you to do is to be very strategic with your capital. You're no longer making emotional decisions of, hey, my friend told me to buy this stock, I'm going to buy this stock right now. You've allocated a specific amount of money of your assets into stocks, into real estate, and then you might adjust things in that particular stock bucket or that real estate bucket. But really, what you're trying to do is create a strategy for yourself. So it's very simple. You can write down a spreadsheet of these assets, list them out, and then calculate the overall percentages from there. Now let's talk about the giving aspect. So, as Muslims, obviously we have zakah, which is mandatory, but we also have sadaqah, which is voluntary. And again, just like we talked about in automating the investing part, the best deeds are consistent. And so I like to automate my giving. The second aspect of here is that you can reduce any of your concentrated positions by donating any appreciated stock that you might have. So let's say that you work at Apple, you might get some stocks as part of your salary. And what ends up happening a lot of the times is that people have much more of that stock compared to anything else in their stock portfolio or of their overall assets. So what you want to do is reduce that over concentration position. There's two ways that you can do that. You can sell it by paying, but you'll have to pay taxes on the gains. Or number two is that you can donate some of that stock and then you avoid having to pay any taxes on those gains. So what I would recommend to doing is that if you're going to donate, for example, your zakah or any other sadaqah in Ramadan that's coming up, inshallah, then you calculate how much that is, and then you sell that amount of portion of any concentrated stock that you have. The second part to this is that if you have any, the best way that I like to donate my money is to use something called the Donor Advised Fund. And there's one that I use called Charity Vest, which is free. What it basically allows you to do is donate to Charity Vest, and then Charity Vest can be donated across all of these various charities. And then you can automatically schedule giving to Charity Vest and automatically schedule checks or electronic donations to any of the charities. The best part about it is that you get one tax receipt at the end of the year, which makes life really easy when it comes to March tax returns. Now let's talk about mastering the psychology of money. We talked a little bit about that in the beginning of like how important it is to master this. So the second book I really love to recommend to people is called The Psychology of Money by Morgan Housel. He actually has a second book as well. All of his writing is excellent. But these are a couple of quotes from his book, which kind of relates very well to the concepts that we've been talking to so far. So the first one is the hardest financial skill is getting the goalpost to stop moving. So this is the concept of spending that we talked about of, am I doing this for myself or am I doing this for someone else? This one is really interesting. Wealth is what you don't see, right? So sometimes when people think about wealth, it's like, someone having a Ferrari or having something. That's wealth actually spent, right? Wealth is actually what you don't see, what someone has in investments that you don't know about, or someone has in their savings that you don't know about, or someone that has donated X amount of money to a cause, for example. The third piece is you will desire less if you care less about what others think of you. Again, this ties back to the spending concept that we talked about. And then the fourth thing is that few things matter more than understanding your time horizon. This is really, really important. Like, when sometimes people think about the stock market, they see all this volatility going up and down, almost on a daily basis, sometimes even on an hourly basis. And the people that are watching that or care about that are trying to optimize these short-term trades, trying to make a fast buck within a day and do kind of this short-term trading. The way that we should be thinking about investing is long-term. So I don't necessarily care about, how much Apple stock went up today or tomorrow. I'm looking at it from a very long-term perspective, if you will. So honestly, I probably check the stock market on a, I don't know, couple month basis, 3 month basis. It's not something that I look at on a regular basis. The more that you look at it, the more worse that you are likely to do. So in conclusion, before we jump into questions, the first is that financial peace comes from systems, not perfection. We're not trying to optimize every single dollar in terms of investing or saving every possible dollar that we do. We want a balance. We want to achieve balance so that we can focus on our lives and taking care of our family and being good Muslims, inshallah. The second part is that we don't need to track every transaction. You don't need to go line by line and how much did I spend today, or how much in restaurants did I spend this much. We want to create, by creating this system of two bank accounts, if you are ever exceeding your budget, you're going to know pretty fast because that bank account that you put 2/3 of your income in is not going to have enough cash. The third is that the budget is the foundation that we talked about. We're making that budget. We're setting 2/3 for expenses, 1/3 for some of these other aspects. We're setting that, we're tying it back into an automatic system. And then if we're ever going to exceed or shortfall our budget, we're going to find out really quickly just by seeing the bank account balances and not having to track every single transaction. The fourth is that, the savings is really there for supporting short-term needs. The investing is there to support long-term goals. And the fifth is that giving is a central part of our faith. I don't need to tell you that. We have zakah, we have sadaqah. The more that you give, the more that you will be rewarded, inshallah. So that becomes a core component of our finances. And the last item that we talked about is balance matters. Avoid extremes. Avoid investing all in one particular thing. Avoid trying to save every last dollar. When we have a robust kind of system that we've built, a robust capital allocation strategy, like we kind of talked about with the spreadsheet, things are going to get a lot calmer. Things are like the way that you kind of approach investments is going to be very different from someone who's always trying to make the fast buck, trying to look for the next opportunity, and so on. And if we follow these approaches, that's how we can kind of achieve financial peace. So there's some more details about kind of this approach on Muslim.finance. It's kind of the one-page guide that Sheikh Umar and I maintain. And then if you're interested in learning more about Nia, which is kind of the company that we do all of this halal finance series under, you can check out that. We have a debt-free halal home ownership model that is a joint model between homeowners and investors. A pretty unique concept that you can check out as well. So I'll go ahead and start taking questions now. I see a bunch of people come in. So give me a few moments to read that and then we'll go ahead from there. All right, the first question is, does Charity Vest work only when we want to donate shares or also with cash? Good question. You can donate cash or shares. So I actually do a combination of both. I have some set amount that I'm donating every month to Charity Vest for my automatic contributions. And then, when it comes to Ramadan and I might be making more larger donations, that's when I go and I configure donating shares. The second question is gold not a good investment strategy? So let's go back to this slide where we talked about investment guidelines. So this is where I would put a, this is where I would put gold, where you would go into alternatives. So right now, especially with the dollar and kind of people being hesitant about it, that's where I would kind of put this bucket. So it's really an inflation hedge, and that's where I would kind of keep gold, if you will. All right, if you could go ahead and ask, I'm looking through the other webinar chat. Okay, can you wait? So the next question is, do you do private consulting? Sorry, folks, give me 1 minute. All right, the next question is, do you do private consultations, coaching on some of these topics to help Muslims learn how to think about these things and shift their mindset on money, mastering the psychology of money. A little bit, you can just send me a note at safir@nia.com and I can respond. I am not a financial advisor, so I don't do paid consulting, but if you have any specific questions, I'm happy to answer that. Okay, the next question is, you mentioned Mint earlier and the fatigue of tracking every single dollar. Have you used something like Tiller where there's an upfront time cost, but it can be automated to categorize on its own? Would you recommend that? I think there will always be significant time requirement in the beginning to set up budget and especially goalpost moving. How do you manage that when you don't have all the information? I'm just reading the question one more time. 1 second. I think there can always be significant time requirement to set up budget and especially goalpost moving. Okay, so I think it's very I'm not really familiar with Tiller, so I can't necessarily comment on that. But I think one of the biggest mistakes is just like spending a lot of time of over optimizing every single dollar on the budget. Like what I would do is that I would figure out what my budget is, add up the rent, add up, you know, some discretionary amount of saving, and give yourself a healthy room for discretionary amount of saving. Let's say about 10%. So that allows you to not having to adjust the budget like every month or so, right? That will basically help with that approach. So that's kind of what I recommend. And if things change, you can always adjust the budget. But try not to be looking at the bank account almost on a daily basis. Is there a good tool template you recommend for setting that budget? Let me see if I can find one more guidelines there. But I would say it's mostly personal, rent, other expenses, plus 10%, I would say discretionary spending, if you can afford. Now, not everybody can afford that, obviously, but if you can, that's kind of what I would recommend. All right, let me see the other questions. So, other resources to help reorient that you as mentioned. So I would take a look at Muslim.finance once again. So that's the website that I talk about. It has some details more about investment strategies and so on. I can also send a spreadsheet template as well for how to do the investor breakdown basically of the investment strategy. I'll send that in a minute. How do you manage irregular income when you don't have enough saved yet? Um, how do you manage an irregular income when you don't have enough saved yet? So if you have irregular income, I would be very careful about investing a lot of that money at one time, just because you're gonna have irregular income and it falls more under the guidelines of the short-term goals that we talked about. Once you have 3 months of monthly budget, then you can start doing some amount of investing and stuff like that. So that's kind of what I would recommend. I'm going to go ahead and paste the investment portfolio template. That's this table. So it's just a spreadsheet, pretty simple spreadsheet template for that you can check out. All right, let's go through a couple more questions. Are there any free checking account that help categorizing different savings? I'm not aware of any. I mean, I think if you like, I bank with Bank of America, and if you keep some amount of money there, then they don't charge any extra fees. There are some of these apps now that help you categorize things and do automatic like investing. Like I think there was Acorns at this point or something like that. But that was more on the investing side. So it just kind of depends on that approach. Any other questions that I can answer?
What was off? So
Since zakat is based on wealth and not income, how does this impact the framework you shared, which was based off of income? So yeah, I'm not encouraging spending. I'm not encouraging spending any specific amount on zakah, like a percentage of your income. But what I'm saying is to calculate the zakah that you have of your wealth, and then make the donations from there. All right, next question is what are halal alternatives to bonds? Would Nia be considered one? Um, so some people would say that there's something called sukuk, which might be considered a bond. Um, I'm a little bit questionable on it, and so is Sheikh Omar, because often the underlying investments are often really murky. So a bond is basically trying to achieve a fixed income, and sukuks are generally almost in that nature. Really, what we're trying to do, the core premise of Islamic finance is that you have to participate in the gain or the loss. And sukuk is kind of murky in that regard of like how much of the actual loss or potential loss are you participating in. And that's why I kind of had it in this previous slide where that there is no good option available for fixed income. And kind of the next best thing would be investing in real estate and something like Nia, which is kind of more of an open-ended fund, if you will. Next question is, what is your advice on paying debt? So generally, yes, I recommend paying debt first before investing. Now, it's not as binary of a thing. Like, sometimes people have a lot of debt, like in terms of like student loans or something like that. So I would allocate most of my money to paying off debt, but still do some amount of investing, even if it's something as small as $10 a month. So that's pretty important to do, is because you'll generate the habit of consistency. And as you start paying down that back, then you can start increasing the investing. There's another question of, if zakah percentage is much higher than 11% of income, what should one do? Um, I guess that's a pretty unusual situation where you have uh, a lot of assets compared to income. And so that, I guess, that matters less for how you decide to allocate your income, but more for like how you strategically decide to sell certain assets basically, and be able to fund zakat, if you will, right? So that's kind of a more ad hoc take I would do. I would not be trying to pay, like, I particularly am not paying my zakat on a monthly basis, if you will. I'm more saving that for Ramadan, but I'm doing my remaining sadaqah in that time period. For investing, and so the next question is, for investing and stocks, when are the more in-depth seminars scheduled? I think about best brokerage to link with Zoya, or is that even a preferred route? I like M1, but I don't know if it can be linked to Zoya. Um, so we'll be announcing it soon, the investing seminar. Probably it's going to start happening after Ramadan. We've broken it down into 5 sections. We're going to be talking about all of the various asset classes that you can invest in and how to think about that. Um, the best brokerage account, I mean, I use a combination of Schwab or whatever your bank account, whatever you bank account with. There's a partnered brokerage. Zoya also has, I think, some amount of investing that you can do in there as well. The next question is, what is a halal investment for college funds if we are not qualified for ESA? So the only other option that in ESA is an educational savings account. Um, 529s are not eligible for us to invest in because those are only state-sponsored plans, so they don't have any halal options. So the next available option after ESA is a Khatma, which is basically a custodial account, if you will. But that could potentially hurt your children if they are applying for student loans in the future. So that's something to consider. I still have a Kutma account for my daughter, and I still put some amount of savings in there on a monthly basis, or if someone gives us gifts. But that's what I typically use instead of an ESA account. Okay, a few more questions. Can you talk about accredited investor requirement of NIA? Do you have to make more than 200K for previous 2 years, or can you count current year as well? Is it a hard requirement of NIA? I think for this question, if you can email me at safir@nia.com, and I'll be happy to talk to you about it. How to contact you about the mortgages for NIA. So you can go to nia.com. By the way, we're not a mortgage. We're an alternative to a mortgage. And if you're interested either on the home ownership side or the investor side, there's two separate pages for that as well. There's another question of any extra information on the ESA alternative account. What was that called where we can access it? So it's called Khatma, which basically stands for, I believe, custodial. Uh, I think it's basically, or it's also called basically a custodial account. I'm checking the Muslim.finance guide if it mentions the alternative. No, it doesn't. So yeah, it would just be referred to as a custodial account. Like Bank of America or any major bank can do this. Instead of my custodial account being a bank account, I have it as a brokerage account so that I'm investing this money.
Oh,
All right. Any okay, there's one more question about UIF offering profit sharing. There's one more question about UIF offering profit sharing accounts. Are you aware of them? Are they good to park cash before investing? It's not something that I would recommend and support, but might be something to look. Does Nia Invest giving you proceeds from appreciation besides monthly dividends? Does Nia Investment give you proceeds from appreciation besides? Yes, we do. We give unrealized appreciation of about 2 to 3%. Again, email me at safir@nia.com and we can talk about Nia a little bit further. When is the Zakat webinar? It is on, I have the date. I'll find it for you. February 12th, right before Ramadan. We'll send out that note as well. Another question is, are those Khatmas usually able to invest in halal ETFs, mutual funds? Yes. So like I have my Khatma with Merrill Edge because I bank with Bank of America, so I can invest in anything. So I've invested some amount of the money in, amount of growth, or you can invest it in a halal ETF like SPUS. There's another question is, can you clarify why a custodial account would be better than an ESA, which allows for tax-free distributions of gains for education purposes? Yes, a custodial account is never better than an ESA. It's just that an ESA has certain restrictions. You can only contribute to an ESA if you earn less than $110,000 as an individual or $220,000 for joint. Those numbers might be adjusted based off of the IRS, I think publishes new values every year. And then also an ESA is limited for how much that you can contribute. You can only contribute $2,000 per year, if you will. So that might be another thing to consider. The full details about kind of the provisions and the limitations for ESAs is on the bottom section of the Muslim.finance website. I will post a link here as well for everybody. All right. Thank you everybody for all of the questions. Any other questions that I can answer? Give it another minute. Are there any other webinars after this webinar and before the Zakah webinar? We will be having a home ownership webinar with Sheikh Umar on January 22nd. Let me see if I can send the link for that. All right. Another comment is, thank you for always being generous with your time. Wa yakum. most happy to help, inshallah. I don't know if Abir is on and he can share. I'll send the homeownership webinar. 1 second. If you have any other questions, please do ask while I pull that up. Okay, I can't find it right now. Oh, there you go. Abir sent it for everybody. So that's the registration link for the homeownership webinar that we're going to be having with Sheikh Omar. Again, that's on January 22nd. We're going to be talking about, you know, a new debt-free model for home ownership and going through a lot more detail about NIA and kind of the model of how it works. It's probably one of the most requested webinars that we've had. And yeah. All right. One more question was, what are the 3 takeaways you would like us to have from this session? All right, so I would say the 3 takeaways. The first one is understand the psychology of money, right? Your behaviors and how they affect what decisions that you're going to make in terms of investing, saving, spending. The second is financial peace, and that comes from not tracking every single dollar. That comes from building a system, like we talked about, those 2 separate bank accounts, helping you automate that process, if you will. And the third part is balance, right? Well, we're not trying to be too stingy in how we spend our money. We're not trying to be too lavish in kind of how we spend our money either. There's a right balance, and that allows us to have our money work for us rather than us working for our money, so that we can enjoy our lives, be good Muslims, and so on. So that's what I would say the 3 key takeaways are. There's a question about potential riba associated with mortgages. I think I'll let Sheikh Omar answer that on the 22nd webinar. So please do register for that and we can talk about it further from there. All right. Any final questions? I think that was like 30 questions. Can you remind us what are the documentaries or books you recommend or read or watch? Yes. The first one is The Psychology of Money. I'm going to paste it in the chat. The second one is I Will Teach You to Be Rich. Again, horrible title, but it is a very good book. And also a Netflix series. Those are probably my favorite books that I recommend to people. And you will realize that these books have nothing to do about trying to understand investing or anything like that. Again, it's all about that psychology and how can we achieve financial peace. Will it be possible to share the link to the slide deck? Yes, we will share that after the recording. We'll send out a recording and the slide deck as well. All right. Thank you very much for everybody for taking the time. And I hope it was beneficial to you. And if you have any other questions, please do email me at safir@nia.com. I know there was a bunch of questions about NIA, but trying to keep the presentation specifically to essentials of money management. Jazakallah khair. Take care. Assalamu alaikum.